Good morning from our global headquarters in New York. I'm Menace Cranny alongside Danny Berger. You're welcome to Bloomberg Brief. Let's set your agenda.
A gradual approach. Incoming President Trump's economic team is said to be considering a slow ramp-up of tariffs. That Bloomberg scoop sends the dollar lower to snap a 5-day rally and eases a global bond market rout. And a backup plan for the TikTok ban is a potential sale to Elon Musk. More on that scoop coming up. Good morning, Menace.
You couldn't make it up, really, could you? Danny, look, we are grasping at gradualism. Equity markets have turned around. We're up 0.7% on the NASDAQ. What do we mean? 2 to 5% tariffs on an incremental basis over a number of months. That's the story, the Bloomberg scoop. We were at the point of wiping out the Trump bump in equity markets. Of course, we'll know a little bit more about the fourth quarter earnings when JP Morgan and Wells Fargo deliver. But the equity market smelled the burning in the bond market, which has paused for now. Let's just roll it over, have a look at this. This relentless, this breathless move in yields has, well, we're back to flat 477 on the bond markets. By the way, PGIM have sort of said there was a tantrum-esque style to these bond markets. Of course, that's referring to the Ben Bernanke taper tantrum when we moved 50 basis points in a month. But we'll talk more about those tariffs in just a moment.
Well, that easing of the bond market route, helping out the mega caps. NVIDIA, we're keeping our eye on that. It had fallen 10% over 4 days. It's rising in the pre-market session this morning. It is rising by about 2%. The Central News Agency reporting that it plans to establish its Asian headquarters in Taipei.
Coinbase, another stock we're tracking, and other crypto stocks rising after the SEC provided insufficient justification for rejecting its proposed crypto rules.
And Teladoc, that's also rising in the pre-market session, saying that its programs will be accessible via Amazon's health benefits connector, a nearly 10% rally.
A feast of stories to delve into. Today we've got Michael Gapen from Morgan Stanley, and later in the hour, Nancy Tengler joins us from Laffer Tengler Investments. Danny, grasping at gradualism. This is a Bloomberg scoop, and it's about the process and the cadence of tariffs that could come to bear.
And it's a market that's interpreted it as positive. Maybe it just goes to show how far this bond market rout and dollar rally have gone. But one, if we do get something like 5% tariffs per month, that sounds pretty aggressive. Something like IEEPA, this is what Deutsche Bank points out, that's used really easily by the president, can allow him to put it on more easily. And UBS also arguing that then the Fed can't treat it as a one-off price increase. It would be a rolling price increase, and that's problematic for them.
It also sounds sort of abstract. You can sort of imagine at Mar-a-Lago, you've got Scott Bessent talking about the bond market, which is sort of a little bit of a smell of burning, and then you've got Howard Lutnick. So you've got different camps at play in Mar-a-Lago. Can you imagine President-elect Trump seeing this as being the shock and awe policy that he wants to deliver to the world, rather than incremental levels of pain? That's open-ended levels of pain, I would say.
I think that's such a good point. This is the line that I pulled out from this Bloomberg scoop. The proposal is in its early stages and has not yet been presented to Trump, the people said. We could very well get a post from Trump, like we did after that Washington Post story, saying this isn't true, this is not what I want to do.
But definitely different camps involved in this. Let's take the Bloomberg scoop to Michael Gapen, Chief US Economist at Morgan Stanley. Michael, good morning to you. So here's the debate, fresh off the rails from Bloomberg. Incremental tariffs at 2 to 5% per month. Is that more painful than shock and awe and a definite one-off blast of tariffs? Good morning.
Good morning. No, in the extent that if you thought comprehensive tariffs right out the door, that would be very disruptive. But I think, as you're hinting, I'm not sure gradualism is all that different. It delays it. You can still get to the same ultimate endpoint. So yes, it maybe bakes in more slowly, but to your point, 2 to 5% per month can still be a lot. And the problem here, as you know, is that it'll show up in inflation first, but it tends to hit activity later. So how do you know exactly where to stop, even if you're moving gradually?
In that case, if it does end up being the case, Michael, and as we've said, we don't know if it's the case until Trump confirms it or doesn't confirm it, how would the Fed react to such a policy? How would it try to incorporate it into its outlook when we've already seen a Fed that's been very divided as to whether or not to include politics in its outlook?
Right. I do think you got a little hint of that at the last FOMC meeting, where at least some participants baked in expectations of policy. And there, I think the signal is, if we do get widespread tariffs, even if they ramp up gradually, it will likely halt the disinflation decline. Nobody was projecting on the committee that inflation would turn around and reaccelerate, but I think you definitely got the feeling that it might halt the decline in disinflation when they appear, and therefore the Fed's likely to move to the sideline. So I think what we would say is there is a balance here. Over time, tariffs would likely weigh on trade volumes and activity, so the Fed may ultimately cut, but it would have to see how inflation is evolving. So the Fed moves to the sideline. They stop their easing cycle, and then maybe they resume their easing cycle later if the economy slows, as their prior analysis suggested when tariffs come into play.
And this bolsters your view, Michael, that we go towards stallflation, but we return to disinflation over stagflation.
It does. When we look at tariffs alongside immigration policies, those two things are likely to come first in 2025, with deregulation and fiscal policy maybe coming later. Yes, you get the kind of more immediate effect on inflation. Maybe in 2 to 3 months, tariffs show up in inflation, but in 2 to 3 quarters, they start to weigh on activity. Ultimately, then the Fed will likely say, okay, should be a one-off impulse to inflation, even if it's a series of one-off impulses. And the weakness in activity should dominate later. So yes, it's the Fed that moves to the sideline, but then ultimately resumes cuts.
Michael, there's been some commentary this morning that perhaps why we've gotten this report of gradualism is a Trump administration, or at least a cabinet of one, that's aware of the machinations of this market and wants to prevent the kind of ramp up in yields that we've seen, the pain in equity markets. If it is indeed policy that is a market put, how does that change the contours of the economic consequences? How does that change your evaluation and expectations of what we might get after the inauguration from a Trump administration?
Well, I think I would just say if the point of tariffs is to redirect global trade, you have to be willing to accept at least some short-term costs of that, right? So if you raise the cost of trade, you'll get less of it initially. Over time, your intended purpose is to rebalance where that activity takes place, maybe reshoring or onshoring. But there's a delay there, so you might have to accept some softness in the meantime. So I think gradualism reflects those trade-offs. They still want to move in a direction of redirecting global trade, but they don't want to do it in a way that, say, forcefully restricts the momentum that the economy has. So I think they're trying to balance those two components.
Michael, the rhetoric that we've heard from the Fed speak last week was about cautious, was about taking their time. If we look at the movement in yields relative to the rate cuts that we've had, since the jumbo rate cut in September, we're up 113 basis points. We've given back a couple this morning. The Fed has only cut by 100 basis points. We have a net constriction, as it were. When does that come to bear on the Fed in this pause period?
Well, at least if things proceed the way we would anticipate, I would say in the second half of this year, meaning in the near term, the rate market may remain under pressure as growth stays strong and uncertainty about forthcoming fiscal and trade and immigration policies is elevated. But as some of these get implemented, and our suspicion is you get more on tariffs and immigration and, say, less on fiscal, then somewhere in here, concerns about inflation or reignition of inflation, we think would give way to weaker or softer activity. We're not saying the economy is going to be truly weak, just softer activity. Then you're likely to see a rally in some of these longer-term rates. So very timing and policy intensity driven. It's hard to say, oh, in X weeks or X number of months, this is going to be a buy. But we think directionally, this will shift to an outlook where, the longer term yields in the U.S., which have backed up, will likely move significantly lower.
There is another pressure that this country is only just starting to grapple with, Michael, and that is the impact of the LA wildfires, along with the tragic loss of life. You have an area where many, many homes are being lost, and a part of the country that already has acute housing pressure. You have an economy, the state as a whole, that if you rank it by some measures is in the top 10 if it were a country. How are you starting to understand some of the wider economic impact of the devastation we're seeing?
Yeah, certainly it's harder to suggest that the wildfires create, say, significant macroeconomic effects in a $30 trillion economy. So granted, California is large, But we tend, from a macro perspective, the economist tends to look at this similar to how you might see a hurricane, some temporary disruptions that could affect the job market. We also find some evidence that core goods prices are a little higher after wildfires. But this tends to be more of a micro story where we've got insurers in play and we've got some of the municipalities at issue, but it's certainly something that we're watching. The devastation is hard to see and try and understand just from a pure analytical perspective. We should get some disruption out of this, but similar to, say, a hurricane, it's likely to be something that's say temporary or transitory and gets reversed over time. You could even argue it may help home building. But again, you don't want to go through the destruction we're seeing in order to make an argument to help home building. It's just obviously a devastating situation, and our thoughts are with the people of Los Angeles.
Of course, and we would agree with you on all those sentiments. Michael, really great to see you this morning. Thank you so much for joining us. Michael Gapen of Morgan Stanley. Let's get you some other top stories now that are trending on the terminal and to the point of the wildfires. Southern California is facing another round of dangerous fire weather. Crews are struggling to contain the flames in Los Angeles that have killed at least 24 people. The U.S. Storm Prediction Center wind says that gusts are expected to be as high as 75 miles per hour. The blazes have scorched nearly 40,000 acres.
NVIDIA CEO Jensen Huang is embarking on a trip to China this week, visiting major cities. This as Beijing is investigating the company, and the U.S. is putting new curbs on AI chip exports. It's unclear if he'll be meeting with the Chinese officials during the trip, and NVIDIA has declined to comment.
The SEC has fined Blackstone, KKR, Apollo, and others over $63 million for failing to track employees' use of unauthorized communication platforms. It extends the agency's crackdown on those unauthorized apps for business. The firm admitted to violating record-keeping rules and agreed to improve compliance. Now, coming up, could Elon Musk be the next owner of TikTok US? Maybe this was the inevitable outcome. We're going to have more on that potential plan for the app coming up next. It's your Bloomberg Brief. Danny Berger and Manish Krani in New York. President-elect Trump's team is busy at work with just 6 days to go until the inauguration. Sources tell Bloomberg that on tariffs, the economic team is considering a slow month-by-month ramp-up of 2 to 5% rather than starting big. For more, we are joined by Bloomberg's EMEA News Director, Roz Matheson. Roz, I think, again, this is an important part in this story to mention. Our Bloomberg reporting saying that the proposal is in its early stages and has not yet been presented to Trump. How would this square with what we know Trump wants from a tariff policy, and how likely does it seem?
Well, it's interesting to see this coming out, this Bloomberg report, as you say, that this is members of Trump's inner circle. It's got the fingerprints of the Treasury Secretary nominee Bessent on it. And the idea would be to be quite pragmatic in a way about the rollout of tariffs. So you start with one thing fairly small. You see how that results. Does it prompt a reaction? Does it prompt behavioural change? Do you then come back with something bigger and going up gradually? And a sense from that really in the market reaction today is that people are saying, well, this might signal some pragmatism in the administration, certainly in those who've got Trump's ear. The question, of course, as you say, is this seems to be something they're coming up with. They will then present it to Donald Trump. How will Donald Trump react? Does he want to come out of the gate either way with something very big bang? He likes to make a splash. Will he listen to this as a negotiating tool, really, on tariffs? It's hard to say. And he is someone who can change his mind, but he's been saying very publicly he's not really interested in gradual actions here out of the gate. So it's interesting to see at least the conversation that's going on in those around him. The question is, how would Donald Trump react?
Well, certainly we've got to wait to hear from the president-elect. We know that he likes to take to social media sometimes to quash ideas about tariffs. He's got his own very clear view about what he wants to deliver politically. He's got a number of his picks for cabinet up in front of Capitol Hill this week. Defense Secretary Pete Hegseth is probably the one that we're going to focus on first. One of his first picks at these confirmation hearings. Now, look, you've got a whole host of narrative here. You've got the Democratic leader, Chuck Schumer, saying it's about holding the feet to the fire. But Joni Ernst is going to be particularly important here as she's pivoted from being against Hegseth to perhaps being on his side.
Well, that's right. This is the Iowa Republican senator, and she's kind of arched an eyebrow at the very least over this nomination. But as you say, she's also kind of changed her tune a bit due to a public backlash over some of her comments. She's very interested, obviously, in the role of women in the military. And the reality is that even though the Democrats are obviously going to come hard in this confirmation hearing, you've got, allegations of sexual assault, public intoxication, financial mismanagement, all of which he denies. That's going to come out again in this conversation, and his credentials really to oversee such an important and significant organisation in the US administration. However, are any Republican senators going to publicly state their opposition, including the Iowa senator? Given the makeup of the Senate and the GOP position there, at this point it's unlikely. It's hard to see what's going to stop this nomination. I mean, all the lurid details in a way about him are already out there. So difficult to see how this confirmation would be stopped. And interesting also to see the others who are up this week, and really, again, people like the Treasury Secretary nominee. And it's in a way interesting to hear their views in these hearings, less about their credentials, but more about how they see things like the US economy, inflation, and so on.
Well, Elizabeth Warren's got 72 questions, apparently, for Mr. Hegseth, so he better be prepared. But no public dissent so far from the 53 to 47 majority that they've got. Ros, thank you very much. Ros Matheson there on the political trail. Time is running out for TikTok's US operation to find the alternative arrangement before the app gets banned. And Chinese officials, we understand, are exploring a potential sale of of TikTok US to the world's richest man, Elon Musk. That's according to Bloomberg sources. For more on the story, we're joined by Tengler Basin, tech analyst over at Bloomberg Intelligence. So this is a pretty incredible story, that if Elon Musk, who owns X, can get his hands on TikTok US, can you imagine the advertising and information sway that he would have? What do we know about the potential for the sale to Elon Musk?
Yeah, sure. So this is pretty fast-moving. It comes out of Bloomberg News reporting that the Chinese officials are the ones who are exploring a potential sale to Elon Musk. And I think it's key to note that we don't yet know whether ByteDance, TikTok's owner, is engaged in those discussions. But we know is that Chinese officials might consider this as a potential bargaining chip as they ramp up for how to deal with President Donald Trump in his second term with incoming tariffs. But what we don't know is how advanced these discussions are, and whether it's going to be enough to sort of stave off the impending ban of TikTok, which would take effect on January 19th. So that'd be one day before President Trump takes over as president. So right now we're sort of waiting to see how much substance there's to discussions, and is it going to be enough to sort of get a reprieve of that impending ban?
I mean, it just shows the immense power that Elon Musk has had since getting closer to President-elect Donald Trump. Tamlin, I think the point you make about China pushing this being a really interesting one, does it kind of suggest that ByteDance's fate when it comes to U.S. TikTok isn't in its hands anymore?
Yeah, well, I think if you actually look at why we're in this position overall, it is potentially because of China's influence over that app. That is because of all the sensitive user data that Chinese officials potentially had access to. So we always knew that China sort of had a hand in ByteDance and TikTok. So I do think it shows us that maybe if China was very invested in moving forward with a potential sale, that it might be able to get some things done. But I still do believe that ByteDance is going to have some say in this. And more importantly, I think it's also clear that we don't yet know whether or not this TikTok algorithm would be included in that potential sale. And that's something that Chinese officials have said over and over, that they don't want to see that sold. They see that as a piece of sort of national sense of security, that algorithm. So I think there's a lot of things that we're waiting to see further reported.
So many questions, and literally 5 days to go into the ban. Tamlin, thank you so much for joining us. Tengler Basin from Bloomberg Intelligence. We'll have more of your front pages coming up on your Bloomberg Brief. From our global headquarters in New York, welcome to Bloomberg Brief. Danny Berger alongside Manus Cranny. Let's set your agenda.
A gradual approach. Incoming President Trump's economic team is said to be considering a slow ramp-up of tariffs. That Bloomberg scoop sends the dollar lower and snaps a 5-day rally and eases a global bond rout. A backup plan for the TikTok ban. Is a potential sale to Elon Musk on the cards? More on the Bloomberg scoop in just a moment. Danny, good morning. I love that story.
If it rhymes, it must be true, Manus. I think that them's the rules. Well, that trial balloon of a slow rolling 2 to 5% increase in tariffs has arrested the downturn in equity markets, at least for now, led by what led the leg down. NASDAQ and Russell 2000 futures up more than 0.6%. Same goes for this bond market, which yesterday, before this story broke, before the close of bond markets, yields were at new multi-year highs. We are basically unchanged this morning, below 4.8%. But Manus, in looking at this story, and you made this really good point, this idea that this goes against what Trump wants, this idea of shock and awe, big tariffs. Why have this story come out? Why float this trial balloon? And I wonder if it is that, a trial balloon of the ability of Scott Bessent and other advisors to go to Trump and say, look at how the market has reacted to this. You're seeing an equity market rally. You're seeing a bond market rout ease. The market's like this. Therefore, perhaps a president-elect would like an approach like this, too.
It's got the hallmarks of the makings of a Trump put. You present it to the president-elect and say, look, these equity markets have wiped out the Trump bump. The bond markets, you can smell the rubber burning in the bond markets, quite literally, and there's a lot of concern that they're almost like a taper tantrum-esque. But this also, I think, gives us a little bit of an insight into the power play within Mar-a-Lago. Is it the cadence of Scott Bessent and that rationality about a bond market, perhaps versus Howard Lutnick, the Commerce Secretary? So it's a Treasury Secretary, perhaps versus the Commerce Secretary, but it's certainly different camps with different views on how to present and win the market's mind over tariffs.
Right. Is it a preview of the Trump put? Is this what the next 4 years might be like on tariff policy? And Manus, it does come after you've had this switch in markets, because you had a tech-led market charging higher post-election. But then since this new year, you've had most major U.S. indices are down on the year. That's led by small caps. You can see they're down by 1.6%. Nancy Tengler, the CEO of Laffer Tengler Investments, writes, we may need a correction, but that doesn't always mean we get one. When we do, we think it is a buy-the-dip opportunity. Be patient and be deliberate. I'm pleased to say that Nancy joins us now. Nancy, what do you make of the weakness to start the year? Does this look like the start of that buy-the-dip correction that you've been writing about?
Well, Danny, thanks so much for having me. Good morning, Manus, and Happy New Year to both of you. Yeah, I do think so. And, you know, I was reading a piece by Ed Yardeni, and he said people accuse him of being a perma bull. I am most definitely not a perma bull, but I do think that we're in a bull market and that you use the volatility that's created by the hedge funds and the algorithms to buy the high quality companies you want to own. And, you know, we've been hearing the end to the technology story for 3 years. Every summer, somebody pounds the table and says it's over, we're broadening. And indeed, we really can't get where we need to go without technology continuing to drive earnings growth. And in fact, that is what we expect for 2025, as do most analysts, that technology will be the lion's share of earnings growth and margin growth and to a lesser extent, revenue growth. So I do think you want to be patient. There was a lot of tax loss equivalent selling going on. You had people selling out of the bad names in the fourth quarter or in December. Then you're seeing them buy them back, and you're seeing them wait to sell the good names, many of the technology names. And I think that's really what we've seen for the first couple of weeks of the year. And I do think from here we'll start trading on fundamentals and earnings.
Well, Nancy, let's just square away. I mean, we sort of joke and jibe with you about NVIDIA, but NVIDIA dropped by over 13% at one juncture yesterday. The question is, when you see those kind of technical corrections, are you forced to reevaluate and buy a little bit of NVIDIA because you cannot live without it? You've got to take advantage of these moments.
You do, Manus. I absolutely. Like, if you just saw Jensen Huang's presentation at CES, I don't know how you could not be optimistic about the company's future and, in fact, the whole technology space. Now, we own NVIDIA. We've talked about it for a year. We got in the summer tech swoon, admittedly late, but we're still happy with where we entered. But the poor man's NVIDIA, Broadcom, is in our 12 best ideas portfolio, and in fact, one of my 5 for 25 names. And so I think the infrastructure spending will continue. We just heard Microsoft say they're going to spend $80 billion on data center build-outs in fiscal year 2025, which ends in June. And you've heard ServiceNow CEO Bill McDermott say he expects $20 trillion in AI spending by 2030. So you don't have to be. None of them have to be right. You just have to be directionally right to see a long future of spending in this space, and it will continue to drive productivity. And productivity is kind of my thing. We've been talking about it for 2 years. We think productivity is what's going to save the day in the next couple of years.
Well, as these tech companies hope to grow, maybe through acquisition, maybe through building out these data centers, they're hoping that they're going to have a friendly administration as they do that. Nancy, perhaps that's partially what's behind kind of the magnification of some of these companies, of Zuckerberg going on Joe Rogan talking about masculine energy coming back, of him changing the look of Facebook, of Amazon buying the rights to Melania Trump documentary produced by her herself, Jensen Huang at CES himself saying he would love to meet with President Donald Trump. For you as an investor, how important is it, looking at these individual companies, these CEOs appealing to Trump? Is there any tradable information on that? I mean, at the very least, you got someone like Elon Musk, because of his closeness, potentially might end up owning U.S. TikTok.
That story is priceless. I love it. I hope it happens. It makes me laugh. But yeah, I mean, I think the pivoting by these CEOs is breathtaking. I think Wizard of Oz, how quickly people come and go here from Dorothy. I think that is what they do. And so, yeah, it tells you where they see the market going directionally. If you get just half of the corporate tax cuts that the president has telegraphed, or the president-elect has telegraphed, it will add 4% to S&P earnings growth. If you get deregulation, it's hard to quantify, but we know that that's also really a tax cut. So if you think about why these CEOs are pandering, maybe they really believe it. I guess I don't want to be that cynical this early in the morning, but I think it tells you the direction and the animal spirits that will return. I've heard people talk about the Trump trade unwinding. It hasn't unwound. I think we'll continue to see it move forward. And that this talk about, staging tariffs. I mean, this is what this president-elect does. He throws out headlines, sees where they settle. He uses them as a negotiating tactic. But note that the tariffs actually against China, for example, were higher under the Biden administration than they were under Trump 1.0.
I like the way you sort of say, look, it's a technical unwind of the Trump bump in terms of a market that is retraced, but the fundamentals are there to carry forward. Can we just push a little bit further on the deregulation? You say you love the story TikTok X AI. I mean, it's a trifecta that would be a data man or woman's heaven. But it does speak to the regulation environment that we potentially go into for big tech in the next 4 years. And this is what Danny and I talked about this morning at the desk. And Danny said, basically, yeah, if this will and could happen in a regulatory environment under Trump than in the previous 4 years. And that plays heavily to tech.
Yeah, it does, man. I think, when Trump 1.0 happened, what you heard was that technology would be to the original Trump, if you will, what energy was to the Obama administration. But in fact, technology was the top performing sector during his presidency. And I think we're going to see that again. I think with Elon Musk in his ear and Vivek Ramaswamy, he understands, and I think he understands this himself, by the way, that we need technology to drive productivity. That is what makes America the best house on the global block. And we spend more on CapEx and R&D, and it shows up in our productivity and GDP numbers. And I think everyone wants to see that American exceptionalism continue. So I'm very optimistic that, there'll be volatility, of course. We will ultimately get a correction at some point. But for your viewers, I think what they want to do is step back, take a breath, buy the great companies and add to your holdings. In my 5 for 25, for example, we added Spotify to our 12 best ideas portfolio. We've owned it for years. You know, sometimes you think, well, it's already up a lot, but that company's going to earn earnings growth is going to be 58% this year and 28% in 2026. So after the year of monetization, this strong management team has pivoted, and it's also a recession-proof kind of a stock. So I think there's plenty of those out there that investors can enjoy.
This is Bloomberg Brief. I'm Manish Krenny alongside Danny Berger here in New York. We have less than a week to go until the incoming President Trump returns to the White House. Bloomberg has learned that his economic team is looking into a gradual approach to ramping up tariffs, increasing them by 2 to 5% a month. Joining us now is Bloomberg's Joshua Galou in Munich. So, Josh, this is one of those fantastic kites that is flying. This has all the hallmarks of Scott Bessent, which is about gradualism, rather than the shock and awe that we're used to under the first Trump presidency. How much of this would be sort of at odds with the President Trump-elect that we know, which is about shock and awe rather than gradualism?
That's a great question. It's really what's going to define his return to office, right? Because back during his first term, he would announce, I recall he announced tariffs during a cabinet meeting that no one had ever really prepared for. But it's a sign, you know, Bessent comes in and he has a different style, as you say, than Trump. But, you know, he's going to have to walk a line here. He's going to have to try and find a way for Trump to make good on his promises. He has pledged he's going to raise tariffs, but at the same time not rattling markets. We've already seen long-term borrowing costs across the world go up in response. And the last thing that they need is to spike inflation, which is something that would be very high risk. People are already pricing that in. I
was going to say, because the existence of this story in itself is fascinating, because we've seen these kind of trial balloons been floated before, most recently from the Washington Post of only targeting for tariffs critical supplies coming into the U.S., which Trump quickly posted on Truth Social saying that it wasn't the case. To what degree should we view some of these stories as a trial balloon to say, hey, we can put these types of tariffs on to the extent that you want, but doing it slowly means, as you said, it doesn't upset the market?
Right, and I think that's fair, and it's important to understand that this report, about taking a gradual approach to the tariffs, this is something that even the people familiar with the matter have said is early stages. This is something that Bessent is working on with Kevin Hassett. It has not gone to the president yet. And that means, look, nothing's decided, but I think these are exactly that. These are they're sending signals to the market. Please don't overreact. Please don't already price in a 10 to 20% tariff. And I think it's also probably part of Bessent's strategy internally to try and show the president, walk him back a little bit from some of the more controversial policies that could have impacts that they don't want.
Josh, we're also starting the hearings of the cabinet on Capitol Hill. One of his picks there is the Defense Secretary, Pete Hegseth. The question you got to ask yourself, some of them are going to be more contentious than others. Some of them are going to be more interested in what their views on policy. But with Hegseth, how much of a journey, how much of a hill has he climbed in terms of pushback against his nomination, in terms of experience, and some of the accusations that have been made against him? Do you think that he's overcome the significant, pushback from the likes of Joni Ernst?
Yeah, exactly. That's the question, right? And I don't know that he's overcome that, but or if his efforts to overcome it, if that's the metric, or if it's about Republicans wanting to stay true to what Trump wants, and whether they're willing to really go and push back hard on a nominee. At this point, they have a 53 to 47 Senate majority. I just don't see it going as far as denying him the nomination. But of course, as you said, Joni Ernst, head of the Armed Services Committee, we'll have to see what she comes out with. She had early words for him where she was very critical of his record, the accusations of sexual assault, the mismanagement. and she got a pretty quick and fierce backlash from Trump supporters. So we'll have to see how tempered her questions are today. He's definitely going to face a lot of pushback from Democrats. But, you know, to be honest, I think that the Republicans' willingness to actually go against Trump on a nominee right now, they'd have to take a pretty hard stand.
Potentially some must-watch TV today. Josh, thank you so much. Bloomberg's Josh Galou. Now, another Bloomberg scoop, and we should just say the Bloomberg News team has been on fire. Really impressive reporting today. The latest of which, TikTok owner ByteDance is evaluating potential options for the popular app's U.S. operations. Bloomberg sources say that one of the options for China is to have ByteDance sell it to Elon Musk. For more on this story, we are joined by Peter Elstrom, Bloomberg's executive editor for global tech. Peter, what do we know about the push, again, we should emphasize this, of China having ByteDance sell rather than kind of a ByteDance-led type of sale to Elon Musk?
Yeah, that's right. So just a reminder, we're just days away from this ban on the TikTok app in the U.S. going into effect. That would happen on January 19th. The company has appealed to the Supreme Court. They'd like to be able to put a stay on that or maybe overturn it on free speech grounds. But in the meantime, what we've learned from our sources is that government officials in Beijing are debating a variety of options for TikTok. It's owned by the Chinese company ByteDance, and they're talking through options where they may do a number of things. Their preference is to win in court if they possibly can, to avoid a ban in the United States. But one of the backup options would be able to sell the TikTok U.S. operations to Elon Musk. Elon Musk is considered a close ally of Trump's, of course, and being able to pair the TikTok operations with X, the social media company that's under Musk's control, would have some appeal for them. It's not clear whether they've talked with the companies about this. It's not clear whether ByteDance or TikTok or even Musk himself have been directly involved in these talks. But government officials in Beijing are considering whether that would make sense. They have some control over the company because they have a so-called golden share in the company, and also because they have regulations in place where you can't sell that kind of asset with the algorithms that they have without government approval.
Well, you know, Elon Musk has formed, he bought Twitter, and some people would say that he root and branch took that company apart. It's a fundamentally different organization. What kind of power would this give Musk? I mean, we don't know whether the TikTok algo will be included in any U.S. sale, but just the scale of kind of share of voice in the U.S. economy would Musk have?
Yeah, of course, it would mean more consolidation within the social media sphere in the United States would be a concern for certain people. And again, it's not clear whether they've talked through these things, whether Musk has any explicit plans, whether they'd be able to reach terms for a deal. It would be a huge deal, $40 to $50 billion, according to our estimates. But if you look at the precedent of Twitter, which is now called X, there are some pretty dramatic moves that Musk made with that company. He laid off 75 to 80% of the staff, figured he didn't need people doing a lot of things they had done in the past, including content moderation. Yeah. He agreed to just leave it up to community notes and let people take control of it. So he pared back a lot. He pared the staff substantially, and then he proceeded to kind of let the platform open. He calls himself a free speech absolutist and lets people talk about almost whatever they want.
Peter, yep, thank you very much. And we've just seen, obviously, Meta step back from some of its moderating here in the United States of America and moving to community notes. So there's a sea change in tech. Peter, thank you very much. Peter Elstrom, there, Bloomberg's executive editor. Some breaking news for you coming through on the potential for a ceasefire in the Middle East. This is from the Qataris. The Qataris are saying we are the closest that we've ever been to a truce on a deal. However, Qatar says that sides still disagree on some implementation details. This is after both the Trump and Biden administration have said that Israel-Hamas near a deal on a Gaza ceasefire. So we know that the Trump negotiators are there as well. We'll get you up to speed with that story in just a moment.
Some breaking news. Qatar saying that a truce between Israel and Hamas is the closest it has ever been. Let's go straight to our reporter, Mark Champion, on this. Mark, what do we know so far? How close does a ceasefire appear to be?
Well, it does seem to be as close as it's ever been. We have been here before, of course. It got quite close before, but the timing is very different. The fact that there's going to be a new president in the White House who's, both friendly to Israel and very insistent that there should be a deal by the time he takes office also seems to be really operative. The deal, as far as we know, isn't very different from what's been on the table before. And there still are some implementation details to get through, as Hamas and Qatar have both said at this point.
Okay, Mark, thank you so much. And of course, the president-elect's team is on the ground there as well. Steve Witkoff, that's the designated Middle East envoy. We'll track this story through the morning. Surveillance will pick it up in just a moment.